The Bulls versus the Bears. Get in the game. www.tackletrading.com.
Okay, welcome to our coaches show here on a Thursday evening. Good to have everybody. Looks like we got quite a few attendees filing in here. It's great to have you guys, and thank you for spending your time here on a Thursday night with us. Noah, my man, what a week in the market. A lot of volatility. Why don't you walk us through what you're seeing out there?
Well, it's been a pretty interesting week, to say the least. Let me grab my mock trader here. Pop open a chart. I am short a day of data for some reason. I've got to figure what that's all about. Are you sitting in front of your computer, Tim, where I can make it show your screen while I get my data figured out? Is that okay?
Yeah, sure.
Okay, I'll make you the presenter real quick.
Yeah.
All right. Sorry about that. And go.
You got that up?
Yep. Now show your screen. See it. You bet.
You know, it's interesting. I was sitting here I'm in Las Vegas right now at the Rich Dad Education Symposium, listening to speakers, talking to investors and entrepreneurs. It's always great to be around people with a like mindset. And the market didn't really do much today, but everybody's been talking about it. In fact, every speaker referenced the recent volatility and the recent selling. It's catching the eye and the ear of, real estate people, and whether or not you're in asset protection or you play in the physical metals market or if you play the stock market, everybody's kind of watching this volatility lately. And the S&P, and I might be a little bit slow on data here too. I don't know if my recent candlestick came in, but I'll go to FinViz instead.
Oh, yeah, I think I've got it now. Let me double check it here. Yeah, I've got it.
We'll come back to you.
I'll bring it back. So yeah, I was trying to figure it out, and I actually think the issue is not on my end. I think it's actually eSignal runs a data scrub this time of night. So hang tight 1 second. I'll make myself the presenter.
Okay. Yeah. Anyway, and while you do that, we'll just kind of talk for just a minute. I got to watch Andy Tanner speak and Jim Francis speak today, among 4 or 5 others, and it really is inspiring when you're around other investors and traders. And I've seen Andy speak probably 10 or 15 or 20 times, and it fails to or it ceases to amaze me when I shouldn't say I said that wrong. It ceases to amaze me how he can get me fired up, and pretty much any time I hear him speak about pretty much any topic. And it's one of the reasons why I love the idea behind tackle trading, is that we're all coming together, like-minded. We're trying to help each other, different stages of our education. The coaches have been doing this for a long time. I think we added it up one time. It's over 60 years of combined experience. And then we've got all these new people, and it just is a great privilege to be able to teach these guys, and you take it serious. But anyway, let's jump into market conditions here. S&P in front of us. Looks like you're bringing some stuff up.
Absolutely. So we guys looking at it from just a big weekly perspective. If you want to look at it from a weekly perspective, the market has, you look at it, it's really given up the last year's gain in just the last few weeks. And, pretty significant down. For those who, notice we got a double top chart pattern here in inframerder. If I bring that back into a daily time frame, what an interesting week. Key support zone broken, and I expected it to try and find some support down around 1850, maybe even as low as 1800, and market has just popped down. We have some of the interesting things here is that big long lower shadow from yesterday, and then today's market movement, from where it opened to close, doesn't seem like it has moved much to the casual observer, but a pretty volatile day overall. Quite the move, just as far as range from bottom to top. And just looking at that, kind of putting it into the big perspective, this is a general support resistance zone. We've got that here at 1850, and the market has with the S&P, it tends to bounce around the big numbers like 2000. 1900, 1850, so on and so forth. So this is a pretty key price point for it. And all of our market breadth indicators, things that we talked about this week, in our earlier coaches show this week, we talked a little bit about the volatility index. We talked a little bit about some of the market breadth indicators. We've had some discussion around things like the trend. And, we take a look at those, like if we take a look at the volatility index, it shot pretty high and it's out there. It got out, touched 30. Here's the close down inside on that. So that's actually a strong signal on our coaches show early in the week. Gino was talking about that when the volatility index, let me go ahead and I'm going to add a Bollinger Band to it. We watch for it to poke outside of that Bollinger Band and we wait for it to close back down inside. So this could be a signal for a potential near-term market bottom, not we don't like to go out too far on a limb and say that, yes, this is the bottom, but that's actually one of the strong signs we've seen is that volatility index at 25. Now, Tim, talk to me a little bit about what that number 25 would mean to you as a trader and what type of implications that volatility index has and how the higher implied volatility changes the way you approach the markets.
Well, I remember you and Gino talking about this the other day. When it breaks out of certain levels, it means a lot more to you, and that does trigger with me as well. I actually think of the number 20 in this market. If you pull that back on a weekly chart, you'll recognize that the volatility has broken out. Now, that doesn't mean it's going to go straight up. Even during some of the biggest stretches of volatility that you've ever seen, it goes up and down on a day-to-day basis. But we have not seen levels like this since 2011. And when you pull it back further, we haven't really seen a volatility spike like this in terms of the candlestick range until the crash in August of 11. Earlier than that, you had the flash crash in May of 2010. It really is a special time in the market for volatility, and volatility brings a lot to the table. It allows you, if you're a credit trader, to go further out of the money and still generate income. If you're a debit trader, you can get in and gamma scalp the market and play some stuff short term. But I want to go back on a point you made a minute ago that really grabbed my attention. Go to the S&P for a second, Noah.
Okay.
And you had made a statement that just triggered a thought with me. You said, well, we've given back all of our gains for the year in this 1 month. If you would do me a favor, draw me a line from January 1st, whatever the price was on January 1st, to today.
So we go back to January.
To in September.
Well, here we are. This is January. Boom, 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 boom. First, right here.
Right in there. So take your line drawing tool and just draw a line from just straight through the candlesticks. You don't have to connect anything to the top of all the candlesticks to the yearly high.
All right. So you want me to? Sorry, I'm just setting the level for us right there. So sure. January 1, the market's at 1845.
Mm-hmm.
Okay.
And then just draw a line so that we can see the duration, the range from January to September, and grab January to the yearly high about September 10th, 15th, whatever that day was.
So if we're looking at where we are just to the high, so if we were to kind of look at it from this perspective here, you want me to draw a line which way?
Oh, just kind of connect the dots, top of January where you were to the top of September.
So top of September, clear back out here. So just like a peak.
Yep.
Okay.
Okay, there's an old adage in trading that basically goes like this. The bulls take the stairs, the bears take the elevator. And what we saw there, January, February, March, April, May, June, July, August, September, 9 months of activity of general bullishness, all gone in about 3 weeks.
Yeah.
Bulls
you want to look at the overall duration. Yep, that's pretty stark. Now, that's an interesting concept, and it's why I love a bear market. It's everybody's always happy when the market's going up. Everybody's always feels good about the economy. Things are great when the markets are going up, but I love a good down market because the market prices move so fast. There's so much money to be made in short periods of time. And once I think you get a taste for that, you want it all the time. I always think like in bears, like you'd see them at the, maybe in Yellowstone, once they become problematic feeders, once they get around humans and they find easy pickings, that's what they want all the time. So sometimes the park rangers have to come put them down. Once you get a taste for blood as a bear, I think I've become a problematic bear. I always want the markets to be bearish. I'm an opportunistic feeder. I like the easy pickings that come with the bear market.
Yeah, Yellowstone.
Yogi Berra reference. I don't know, something like that.
I'm scared of bears, though. I'll tell you. I hike and camp a lot in the mountains, and I think that that does trigger some real experiences with me. I went camping with a kid one time who wore a gun on his hip, and for a bunch of hippies, everybody was kind of nervous about it, and they're like, "Well, what's going on?" And I didn't think twice about it because I grew up around guns. He said, "Listen, I've had run-ins with bears. I'm wearing this gun." So, yeah, it is what it is. This volatility does bring a lot of opportunity, and I hope that everybody out there is taking advantage of it. A lot of times, in my experience as a coach, a mentor, and a trader, people tend to react differently in times like this. It's natural if you had some losses, if you weren't ready for it. I was talking to one of my students yesterday, and he was saying, "Well, I wasn't ready for this, and I'm just kicking myself because I knew it was going to drop, and I didn't take advantage." Well, you can't go back and change that. You got to take advantage of whatever's in front of you right now. You got to move forward. If you took some losses in September or early October, don't worry about that either. Focus forward. Focus on taking that next step on where you're going to go next. Because, I mean, the past is the past. You learn from it, you try to correct, you try to do better, but you always got to be thinking about your next trade and what you can do to make some money in this market. Which brings up a conversation here with you, Noah. Based on what you're seeing, what do you think is the best way to play this?
Well, something you mentioned earlier about the when we see the VIX, the implied volatility pop up, I'm going to bring up 2 points. When the volatility index, when we see that out at these levels, that on average means there's an old saying in the market, when the VIX is high, it's time to buy. And what that is referring to is it means it's time to buy stock, not options, because this could be a near-term bottom. Now, the VIX can go higher, and we might be getting into a bigger down market. This might just be one of the typical corrections we'd expect. It's hard to say for sure until we see a little bit more play out. But whenever that VIX gets out above that, you mentioned 20. When I see it out here 20, 25, 26, I have a little memory hook that I've picked up from Gino years ago. When the VIX is at 26, that when it gets out above 26, options are no longer the best for buying because the premiums are so high. They are better for selling because of that inflated premium. And so you had mentioned that with the higher volatility, as a credit trader, as a you can go out and write options and find premium further out of the money. So in my mind, I would look at the S&P index right now, and I'd see that the S&P index is just way down, and that it's trading down here. Boom, it's at that potential zone where we might find support. The VIX has shown us a bit of inflection. We could look at other things to kind of take some clues from that, but I could see potentially the market finding short-term support. And what I anticipate the market will do next is potentially rally. I would expect it to rally out towards that 1900 ballpark, maybe look for the old support. So I see this turning into more of a bearish retracement. But to make money right away this weekend, I know what the market's going to do this weekend. It's going to be closed, and because of this, big drop in the higher implied volatility, the first thing that comes to my mind is either way out of the money naked puts or shorter term bull put credit spreads that I would be looking to sell way, way, way out of the money on stocks, fundamentally strong stocks that have been, beat up. The prices drop down on, they might be in key support zones, but the companies are the type that people want to own and buy for the long term. And so if the dip in the market like this comes down, it presents a buy opportunity for some people. And so I'll use that general nature of people to see if they're going to buy in, step up, and drive the prices higher short term. Well, I take a trade way, way, way out of the money and don't worry about my timing being dead on accurate. And I can make the money anyway. So I think that's one of the easier things about these volatile markets is to know how to theta trade, how to make money by not having to pick the directions and by placing positions and structuring yourself so you're far away enough from the action that the day-to-day fluctuations don't make much of a difference to you.
Well, I love that, and I'll add something to that because that kiss of death formula, that where we are at a low point, volatility is at a high point, if it does settle in like you're talking about, it comes back up, it will be testing that old support at some point.
Mm-hmm.
That would be a classic bearish opportunity. Now, even if it's not there, I'm going to use an analogy to this. Imagine if we all worked in a retail shop and we knew there was going to be some big Saturday blowout special sale. You know, we might have to go in 2 or 3 hours before people come to the store and start getting the racks set up and start putting stuff up out and out on display and everything. So right now, even if you're not ready to pull the trigger on your bearish trade, guys, you need to develop your watch list. You have to put a lot of time in tonight, tomorrow, over the weekend. Use the scouting report, and we're going to go through some of those picks. They were killer. But use the scouting report to start to develop that bear list of candidates so that when the customers do show up, you're ready to sell them something.
Okay.
And that might be in the version of a bear call spread, could be directional with puts or a put ratio, something like that.
Let me see if I can illustrate this really, really well here. I've just cracked open little paint program so I can use this little whiteboard here. You mentioned the kiss of death pattern. I just want to make sure that we're all really familiar with what that is. What we saw in the market is the market was in this general upward trend, and prices overall slowed down, and we see a double top form in the market where the tops don't get too much higher, but then we see that support zone break. When the market breaks a support zone, that's a big, big, big signal. And the way that these patterns work is you'll see an initial drop down in price, and then it'll find some near-term buying support and it'll rally back up. And the pattern will typically come right back up and test these previous lows. Now, that's what creates that kiss goodbye. And if you go back and look at every other major market topper, this is generally how topping patterns play out, is that initial breakdown leads to a pretty big sell-off. You'll see some increased volume, and then you'll get this rally back up. And so right now we're down there at those lows. And my initial thought is the way I'm going to look to trade this is I'm going to put way out of the money, bull put credit spreads, like naked puts or bull put credit spreads, way down below support. Mm-hmm. And then when it does turn into a bearish retracement, I like the idea of being able to build up. We're going to put up some great picks. When this does end up rallying, we wait for that signal. That next drop can be a doozy. And I'll take some time this weekend and put up some videos to kind of explain the potential opportunity there. If this ends up being a big market correction, that drop can be a pretty good size one. If it ends up being a nominal market correction, we'll still get a drop. It just won't be as big. So let me go back into a weekly time frame real quick and just kind of look at the previous tops as an example. Here you go back to 2007. Here's that M for murder, the big breakdown. It took it quite some time to rally back up. And here's that kiss goodbye. Now, this works on every time frame. It doesn't matter if it's a daily chart, a weekly chart, an hourly chart. This pattern's pretty universal. So there's that double top breakdown retracement. So I think near term, you'll see this pattern. It actually repeats quite a bit. Here it is again, drops down, rallies up, kiss goodbye, drop. Here it came again, drops down, rallied up. It didn't quite get out there, but it did come into the kiss goodbye zone, dropped a little bit, and then it reversed. The Feds kept pumping it up. So now here we are. Here's our drop. I do suppose we'll find support at wherever the support does come back in and back into a daily time frame. This creates two trading opportunities in the next couple of weeks to make money as it runs up, and then to watch for the subsequent drop, which, the size of which we don't know. But this is the first kind of signal I think I see in the charts, Tim, that makes me interested in potentially setting up some trades that aren't going to, be totally contingent, or I guess that are not going to rely on the movement up to make their money. They're going to be based off of that increased volatility. And we could put out, taking some of the trades from the watch list, see how they played out, what that we put out there on the scouting report. And right now, what I want to scan for this week, going over the weekend, I want to find stocks that are really oversold, way, way, way down, that are set up just like the S&P, gotten beaten up to the point where they might be on sale and people might run and buy. So,
Well, I do want to get into that in just a minute. I want to highlight a point out to the group here, by the way, and those of you who don't know our voices by now, you're listening to Noah and Tim, coaches from TackleTrading.com. We're here for our monthly Expiration Coaches Show that we do for rookie and pro members. If you're a rookie and a pro member, hopefully you're taking advantage of the scouting report that we put out every weekend. Had a lot of hot tips on there, a lot of good picks. I mean, I think that's the most valuable thing we do, quite frankly. Even with all the great videos and blogs, I mean, that watch list really lets people kind of, start their week off right with some good choices. But one thing that you're talking about here, Noah, that I want everybody to focus in on. Guys, traders are always thinking about two things. What can I do now? And what do I think I'm going to be able to do next? See, Noah's talking about selling volatility because we're at a low with some good candlesticks, volatility spike, you go to a low delta, you take advantage of the opportunity now, but we're also thinking about, okay, if it does rally back up, settle in, kiss of death pattern, death cross, red candle, trigger, those bear watch list stocks, they're going to be killer. And so you have to think about both opportunities. It's preparation and action. It's both. And I love that about what we're doing here. I do see some questions coming in here. I think it'd be a good time to invite any questions from people in the group. We've got one from Cal right now, Noah, and then we'll get into the scouting report stuff. Cal asks, I've got a quick question. When the portfolio delta becomes unbalanced, what is the easiest way to find a bullish trade at this market while most of the sectors are in red? Cal, I'll take that one first and then pitch it over to Noah. There are two types of portfolio hedges. There's what we call a forced hedge, and then there's what we call a natural hedge. A forced hedge is when you simply buy delta points on the S&P 500 to offset your risk. Okay, it is the purest form of hedging that you can find. You do all of your calculation, your delta says it's like negative 500. If you want to completely offset that, go into the call options or the put options or whatever it is you need to do. In that example, it'd be call options, and buy 500 points worth of delta. If you want to hedge half of it, buy 250 points of delta. Now that's called a forced hedge. And if you're also trying to hedge gamma, usually you want to use options that are less than 30 days. Maybe here in the next week or so, if you'll remind me, Cal, I can do a video about forced hedging. It is a topic that I think is really, really important. So that would be a great idea. Just remind me about it. And then the second type is a natural hedge. And I think you use some of the cues that Noah's talking about here, where possibly you add in a bull put. You force yourself to go out and scan through your list, do some news searches, whatever it is. You add an out of the money low delta bull put to add some delta in. The only trouble there is you're not adding a lot of delta. If you're truly trying to hedge delta and it's a risk that you're worried about, say tomorrow or short term, you might have to rely on that first choice where you forcibly hedge your account. Now, Noah, thinking about just portfolios in general, how much hedging do you recommend a new trader do? I mean, should they try to do some of this complicated stuff, learn it, or should they just get out of a trade when it's gone wrong?
Well, when you're new to trading and you have limited experience, the easiest way the point of hedging is to neutralize your position, to neutralize your portfolio. So the simplest and always most effective way to neutralize a portfolio is to get out, to go flat, to exit the trade, to eliminate the losses where they're at. When it comes to hedging a portfolio and doing those types of things, one of the things that when it comes to hedging and learning how to do adjustments and protect those things, you have to be cautious of the whipsaw, meaning the market whips up, the market whips down, and basically, if you have a delta posture, in your portfolio that you're trying to offset, the most effective tool in my mind is futures, but then that requires you to have authorization to trade futures. And one of the reasons I gravitate towards futures to hedge would be because they don't inflate with the premiums like the options do. If you use options to hedge, you have to consider the cost of the premium being inflated by the increased volatility. They get a little bit more expensive. Futures will give you that. They give you leverage without having to run into that. But then you have to learn a little bit about how trading futures works and how that type of stuff works. Overall, if you use good stop management on your positions, that's going to keep you from getting into big trouble in the first place. This is one of those types of questions, Tim, where I sure do wish I had a lot of more details to give them better answers overall. I think that in my experience, action is always better than inaction. Like not doing something is gonna get you. If you make a mistake on trying to protect your money, if you do something like that, I'd rather see people make a mistake and cost them than to not do anything and sit like deer in the headlights and get cost money.
Yeah, move forward. It reminds me of a story I heard here today listening to one of the speakers. I'm down here in Las Vegas, guys. I brought my wife and kids down, and I'm participating in the Rich Dad Symposium this week. And it reminds me of one of the stories I heard today from Jim Francis, who is a speaker, motivational speaker. And he said, imagine that you were about to get onto a fire walk where you actually have to walk across, fiery coals. And he said the most important step you'll take is the first step, because then you'll be really motivated to take the rest of them, to get across the fire.
Yeah, absolutely.
And I think that's true here in trading as well. The first step is obviously to have a trading plan, then execute it. When we're talking about hedging, I usually slow down, hesitate, make sure I understand the trader really, really well. Because if you're new to trading, adding in a lot of complicated additional steps to your trade might not be the right idea. One of the best ways to approach your account when you're pretty new to this stuff is to just get out when you're wrong and move on to live another day. It's just like we're looking at with the market right now. And this is something that happens quite often. Traders will get stuck in a portfolio, and then they stop trading, and then they miss the next great opportunity. That's not good. By taking trades off and then constantly reevaluating, I have a mindset, Noah, where I always say at least one trade a day.
Yeah.
I'm at least going to make a day trade, or I'm going to put on a position trade. It might even be an investment. But I always have the mindset when I turn my account on, I'm going to try to find a trade that day. And a lot of that is personality. I just want to make sure I'm doing something, productive with my time too. I treat this like a business, and I want to think of it like a business. So, and that's something maybe those of you who are out there and thinking about, Cal's question and our conversation about hedging, maybe you don't know how to do all that stuff yet. You'll learn in time. You'll get that knowledge in time. But the thing is right now, if you do get into a really complex position, it might just be best to get out of it, free that cash up, find something new at some point. It's a good mindset to have as well.
I've just popped open I got a virtual account that I popped open here just to kind of look at an example of this. And what you're talking about is with your delta, with your postures, depending on how you build yourself out, how your portfolio is balanced. If you've gone very, very bearish and you're expecting the market to rally and you want to adjust, if you've done well on your bearish trades, just take a profit. I teach entire classes on hedging and adjustments, and those types of things can be, definitely complex. If you're looking to balance, one of the first questions that I have is, well, how much capital do you have free to trade with? If you are planning on hedging and adjustments, one of the first lessons you have to learn is how to manage a portfolio so you have the cash on the sidelines to take the adjustment. And in this example, I've got some bullish positions, 100, 176. I got some bearish positions, and the portfolio is clearly more bullish than it is bearish. And if I was trying to, posture it for this week, the market may be running up, I'd probably be okay. But if I was trying to change or alter that, that's going to take some money, either by adding new positions in or taking old positions out. And you have to be able to understand how much money it's going to take to change the portfolio. And so that's one of the things when I am working with people, Tim, is when it comes to portfolio management, is I typically like to see money on the sidelines ready to adjust and hedge. And one of my rules for hedging and adjustments is it a trade I would take brand new if it wasn't involved in this hedge? Meaning, if I wasn't trying to fix this other problem, would I consider this as a brand new trade to begin with?
The old veil of ignorance. I love it. There's a political philosopher that I studied in college. His name is John Rawls. Boring books he writes because he's a Harvard professor. He doesn't really speak in language that most of us can understand. I had to read the book like 4 times just to be able to pass the class. But he had this concept he called the veil of ignorance, Noah. And what you're describing there is the same thing, is that you should approach a situation as if you don't have any stake in it. So like an example here is with trading, imagine that you're not even in the trade to begin with. You
Yep.
staying in is an implied decision that you would get into it right now. Okay, think about that, guys. Would you get into that trade if you didn't have any stake in it? If you could take all of the gains and losses out and just start right then at a break even, would you still put on the bull put in the money? Would you still put on the iron condor that is expiring in 2 days? I love the mindset. I mean, that's a great way to approach it. What if I wasn't in? Would I still get in?
Yes.
The
And
veil of ignorance.
could this trade stand alone on its merit alone? Because when people start learning how to hedge and adjust, they tend to try and over control the situation. They tend to put too many trades on. They tend to try and micromanage it. And in my opinion, if I'm going to make an adjustment, it's going to be based off of a very specific technical explanation, expectation. Like if support breaks, then I expect the stock might drop to the next support zone. That is something that I would try to hedge and adjust on. And if I was wrong on that adjustment, I might have to pull off that adjustment trade. But I don't want to end up with 10 different trades trying to fix one. That's kind of like the whole, I swallowed a spider to catch the fly, to whatever, swallowed a cat to catch the mouse, et cetera, et cetera. You try to get into that game and you end up with some convoluted positions that you don't necessarily know how to fix or unwrap.
Yeah. And Melanie did have a good question we're going to get into in a minute. I have a question for you, though, Noah. When I start dropping political philosophers I read in college, how pretentious is that on a scale of 1 to 10?
Well, from a scale from 1 to 10, I'd put it as like probably a 12. If you had said, when I was at Harvard, I specifically remember this because I was at the cafeteria at Harvard when I read, whatever, that's a little bit more pretentious. But knowing that you're just a dirty hippie, I don't have a problem with it at all.
How you like them apples? I love it. Yeah, no, Melanie, I did see the question in the clubhouse, and I had planned on talking about it tonight. Thank you for reminding me. Just so that I know if you guys can access the questions tab, let's do a little exercise real quick. And type in one of the songs you've listened to in the last week that you love. Just let me know who's here.
We're typing what?
Let me know who's here. One of your favorite songs you've listened to recently. Could be the artist, the name of the song, could be a line from the song. Just let me know that you're here. Type it in as a question so I know if you know how to access it or not. Because Melanie's been in there, Cal's been in there. No mediocre, telephone. Ollie's here, okay. Jukebox Hero, there you go.
All right, we got it. So we can get questions asked there. Does the chat function work?
If we can, holy cow, we're working one piece at a time here.
Oh, wow, this is a good question.
Over the Love, White Stripes. Jack White, Bill, I did just hear a story about him recently on the radio. I mean, what a rock star. That guy, crazy.
Really?
Yeah. He got divorced, Noah, and then he got remarried, and his ex-wife was the only witness to his second wedding. They went down and got married in some river in the Amazon or something. I like the White Stripes too, Bill. Good call on that. So those of you who are typing in, it lets me know you know where the question and answer section is. So as we go through the rest of the session, if you do have a question, definitely type it in there and let me know, and Noah and I will talk about it. Let's talk about Melanie's question. And why don't you pull up the clubhouse for a minute, Noah?
Let me bring that up here. I actually had that queued up right here. Nice sunglasses, Melanie. Great picture. Okay. Let's take a quick look at that.
Read that out loud. Let everybody know
Okay,
she
yeah.
was
Can
asking.
you guys explain opening print and what that means about options on the rut? If they are not closed on the Thursday of expiration week, I read recently about the possible surprise gap on Friday morning, and I want to make sure I understand how that could affect my trade. She has October 5 weeklies and another 2 weeks till expiration. So I also read that the regular third week options on the SPX trade European style and hence should be closed out early, but that the weeklies, first, second, fourth, and fifth Fridays trade like regular American style options. And you can hold them through expiration without the surprise gap of opening print. This is a very complex question, Melanie. Impressive. Does this vary with each index fund? One last thought. Do we have the same considerations on ETF options? No, ETF options all trade American style as far as I understand, Tim.
Yeah,
And
let
then,
me handle this one to start, and then you can jump in. The first thing that I would say to everybody out there is that Melanie brings up a very important point here, is that some options do behave differently right around expiration. Okay, index options, ETF options, which are really stock options, futures options, some of them have little subtle things about them that you need to understand. So if you're adding a strategy into your portfolio, for example, you're going to trade the index options on the RUT or the S&P or the NASDAQ or whatever it might be, or if you're going to trade the futures options, like, we had some people, on the podcast recently, Jake Pelly, who's a Hall of Fame student, he trades naked puts on the crude oil contracts. You need to know every detail about the options you're going to trade. Now, thank God for paper trading, because you can practice anything and kind of figure it out as you go. But before you ever do anything live, make sure you understand the details of those options. Let me start with the index options.
okay. Well,
Melanie,
let's
you're
start out. Let's
absolutely
see if we can define some of these terms real
sure.
quickly.
That'd be good.
Let's start out with opening print. What is opening print?
Well, the index price is not necessarily the actual price of what you're going to settle at. What the CBOE does, and you can find this information online, is they take the actual price from every stock traded on that index, and then they tabulate it, and the cumulative amount is the opening print. So if let's say it's just like 900, for whatever, um, it may not actually settle at 900. So if you have options all the way down at like 850 or 825, you don't even have to worry about it, if you're near the print. But if you were selling the 900 option and they count up the opening print and it's 898 or 902, that can affect the way it settles, either in the money or out of the money. So the closer you get to where your feet are near the fire, the more you have to consider getting out early. A lot of traders who aren't comfortable with the risk of dealing with the settlement price, which is what they call it, they'll just get out on Thursday. A lot of traders will get out on Thursday unless they have a country miles cushion and they don't want to take the gamble.
Well, now can you define
So
country mile for us while we're defining things?
I can. I can define a country mile. I grew up in Huntington, Utah, which is a small town, coal mining town. And if you take Highway 10 towards I-70, it's a 50-mile drive. But after you get outside the little towns, there's about a 12-mile stretch, Noah. Literally, whoever made the road, they did not have to move the wheels on their paver because it is straight and long and there are no hills. That's a country mile. It's as far as the eye can see.
Gotcha.
Straight down the road. We could pull out lawn chairs, sit out, turn the jukebox on, and watch a cop car doing 110 at us, and we would still finish our beer. All right? That's a country mile.
There you
Now,
go.
why we're drinking beer on the highway while a cop car's driving at us, I have no idea. But that's a country mile.
I better be invited to the next time this occurs. This sounds like a good time to me. So
Sure.
I like this in general. So you're talking like, just big cushion, meaning you're not worried about being exercised on because you have so much cushion on the trade. When it comes to, being the seller of options, I personally would rather close out early to stay in control. With index options, they actually are cash settled and they do expire on the Thursday, whereas your regular options, stock options, ETF options will expire on Friday, and they don't have the same cash settlement issue that you have with index funds. And according to the question, it looks like some of them trade European style, which means no exercising until expiration, whereas some trade American style, which means they can be exercised on or before the actual expiration date. So that's the big difference between U.S. style and European style options, is that European style options are only exercised at expiration.
Well,
U.S.
and also they're
options,
cash settled, yeah.
yes.
I mean, U.S. options, when they're stock especially, you got to worry about, being assigned. Yeah, European option does not. And she does bring up an interesting question about the difference between weeklies and regular monthlies. Because it's just like last Friday, Melanie, I'll give you an example. I had a bull put on the S&P that I built as a weekly, and because they were weekly options, had it been settled at opening print, it would have expired out of the money. No, bring up a chart on it, the SPX
Okay.
intraday, and at least far enough to go back last Friday.
So we
There
want
can be
SPX
very
chart.
important differences. Yep.
Okay, and go intraday. What time frame you want? Let's go 30 minutes here.
Sure. Yeah.
And go back to last Friday.
Yep.
Okay, got it.
Should have been around 1925 at the open, then it came all the way down, hit around 1900. Oh, what was Friday? Now you got it. Now you're making me
Friday's
think of the
date.
day.
I actually literally am opening up my calendar and going
The
back and
10th, I'm
figuring it
thinking.
out. There we go. So we've got is it the 10th? Friday the 10th. Okay.
10th,
So back
yeah.
on the 10th, it's right here. Boom. There's the open.
Okay. This will kind of highlight Melanie's question, and hopefully Melanie give you some insight into it. Had this been settled at opening print on settlement, I would have had a full profit. I held this trade in, and I had the 1900 strike. Okay. Now, when it opened up, it was at around 1925, if I remember right.
And that is not a
And
country mile by definition.
no, it was not. It was, it was not. I had a joke there, but it might not be appropriate for the coaches show. But
okay, so you're trading right in here around 1925, and your options are down here at 19. So this is the open, and
yeah,
that's where you're sitting on your options. Okay.
yeah, and because I wanted to enjoy my weekend, when it started selling after about 30 minutes, I just got out. So I didn't get to take my profit on the trade. And even though I don't know exactly where it closed because I got out and moved on, did some day trading, but I didn't have any options expiring on that. But it was close to 1900. It sold pretty aggressively. And I didn't have to worry about it because that red candle right after the open, right after that red line, it started selling. Now, Melanie, had it been this week, those options would already be done. I wouldn't have had to do anything. But because they were weeklies, they don't actually expire until the end of the day like a regular option. I still had to manage them. So your management around Thursday and Friday, depending on the option, does change. Does that give you some clarity on that? You have to kind of know how it's going to work.
Well, and I think something you mentioned earlier is how important it is to understand the instrument you are trading in and out, and how important it is to understand how exercise and assignment can occur, how expiration, what cash settled mean. And, I've gone to the extent of like calling and talking to the broker to make sure I understood in detail, because I want to understand it. And then you mentioned virtually trading and paper trading things first, because when I first started trading options, I got caught on a trade. It was one of my most expensive learning experiences because I did not understand that the assignment could come early. I mean, I understood it, intellectually, but I didn't understand the reality that actually, if that happened, that what it would do to my account, what type of, money requirement would happen. And so what it did is it ended up sucking up all my margin. I had no available funds to change and exit trades. And I got stuck in trades that I was unable to exit. And so I ended up taking quite a hit because I didn't understand the implications of the instrument and the way it can trade, not, to understand how the ins and outs and all the details work. I
Sure.
won't trade something. And so it took me a long time to become comfortable with the weekly options, because it took me a while to wrap my head around them. Because they're different than, the regular options I'd started trading, and just understanding some of their nuances has taken me some time and practice to really get comfortable with.
Got it. Yeah, and Melanie had one follow-up here. Where can we go to find the specifics of different options? Well, obviously, it's great to be in a coaches show like this where you can ask, and so keep showing up like you have been every week, and we definitely love having you here. A web resource. My first reaction was CME Group. Noah,
Yeah.
go to CME Group. It's the actual exchange's website, Melanie.
So we go to the CME Group.
And they have, it's been so long since I read them, years, but last time I had to go over here to look some stuff up. They have some free content over here to describe the definitions of index options and futures options. The Chicago Mercantile Exchange, I mean, that's where a lot of these futures and index products are traded and listed, and so they've provided some information over here. This is where I would direct you.
CME Group, or CME.com. They've also got the Options Learning Institute, where they have videos and things available for you under their little education. They have little videos and things that kind of walk you through and explain how the instruments work. It explains options basics, the rudiments. Good stuff in there, and most of it's free. I mean, just sign up with the little email. They have the classes you can pay for, I think, as well, but good resource. And one of those things that's very, very, and the other, it's a resource that people should tap into that they don't always, is to call their broker, or even use the chat feature that their broker offers to talk with a representative and have them, get some clarification on things.
Let me pull the group real quick. It just made me think of something, because Melanie is an active member in the clubhouse. She attends the coaches show weekly, as well as this monthly expiration party. What do you guys use the most at Tackle Trading? What are you taking advantage of the most? Is it the newsletter? Is it the scouting report? Because whatever you guys like, we're going to keep doing.
I've been loving the scouting report. And I actually have to admit full out that I love those picks Gino puts out, and I've thrown out my watch list midweek and whatnot, but Gino's picks have been money, absolute money. So I've been loving those. The clubhouse, activities picking up. And as we get ready, towards our actual official launch, we've been working on the webpage and trying to build things up. I've been having fun with the clubhouse. Let's see what they got.
Yeah, the clubhouse is neat. Yeah.
Cover to cover.
Yeah, Brad May had a question in the clubhouse. Yeah. Well, Paul is an animal these days. Paul's is a good trader, and he's got a lot going on right now in his portfolio. Actually, I met with him on, I think it was Tuesday, and I took a look at what he's been working on, and a lot of volatility. At the print I saw, Noah, he was up 50% since he had mentoring with me in July. And it's pretty incredible. Paul, I just want to commend you. In fact, give you the old standing O. I think that is so awesome to hear success. So often in life we don't remind each other when we do well. And I think it's great. If you have a good trade, I saw this from Dean Beckett today. If you have a good trade, it's not a bad thing to go into the clubhouse and say, hey guys, this worked for me. Because other people who might be having a down week or a down day, that might be the one thing that lifts them up and say, you know what, Paul can do it, I can do it as well.
Yep.
And that.
Well, and I had another member recently, Tim, Luis Arturo. He actually literally did over 100% return on his account. He was doing some options, and he got somewhere close to like a 400% return doing some directional options. He just happened to be trading bearish signals, and he had a lot of different little trades on, and he managed them all individually. But when the market, all of them hit at once, he was able to just, his account literally just exploded. So those are the success, I think, begets success. And I really like that idea when you are learning to, make money in these markets, and you have, people to talk with. It's challenging to be in a silo. I used to trade by myself down in my basement, in my little basement office. I used to call it the Bat Cave. And when I was down there, and whether or not I was wearing my, Batman tights or not, is I will leave
Did
to
you
your
wear your
imagination.
cape? Did
Yes,
you wear
I
your
did.
cape?
I did. My utility belt was really what it was all about. But the point being is, I was down there in a silo and kind of by myself, and nobody could tell if I was, say, for example, moving my stop loss, or I would get these great trades where I could make big bucks and I'd get really excited and brag about it. But then sometimes I didn't close the trade out and lock in the profit and gave the money back. Being in that, isolation, kind of made my own mistakes and learning experiences. I think I would have gotten more value out of it if I had actually been in communication with other traders more. And the sense of community is what, the general idea of tackle trading has been, my brainchild, and I've been sitting on it for a long time, because back in those days, I just didn't have other people to communicate with about these things, other than a mentor or two that I didn't want to pester all the time. So I, think it's a very, very valuable resource to share not only your questions, to ask questions, to get the answers, but I think I'd like to see some success stories coming out. And one of the things I'm planning on, I don't want to sell vaporware or anything like that, but I'm looking for a trading competition, little trades of the week highlights, where we, share our trades, and we're looking for, highlight reels so we can see what other people are successful at so we can duplicate it.
Well, that is a great idea, and I think it will definitely be a part of the site at some point, but we already have the best version of that because we have the coaches sharing their trades in the scouting report every week. Guys, if you haven't got the access level to where you're getting that scouting report, you're missing out, because Noah and Gino and myself and Matt, we're building this scouting report weekly and sending it out on Saturdays so that you can get tips directly from us. I mean, to me, you should be grabbing that, going through it, doing your own analysis, picking out the ones you want, and running with that. At the end of the day, when we build a scouting report, it doesn't necessarily mean they're ready for Monday morning. And that's why we're doing triggers and stops and targets and everything in there as well. Vega trades, theta trades, so that you know that, okay, it might be a Tuesday, it might be a Thursday, I might have to wait for my trigger. But you should be getting some good tips from us right there in that scouting report weekly, and take advantage of it. Keep an eye out. It's coming out Saturday again. We're going to have a new one this Saturday. And, if you're still how do we know who gets the scouting report? No, is it pro or
Scouting reports pro members, and I think everybody here
pro
is
member?
a pro member. So we've got our pro members, and it's been a valuable resource because you get not only, different picks, you're also getting different style of trades. And the types of trades, directional picks are great, but you're also getting your different trades like your condors and your inverted butterflies. And what I like most about it, if you just kind of take some of these, like, HCA, I just kind of randomly picking off the list here. HIW didn't go the right way, but HCA ended up panning out like a champ. Let's go HCA. Daily time frame here. And, great pick, boom, drops like a rock. And the target, this is the really important part of this. If you look at the target here, 64.50, the trade, you're out of the trade. You're not in it anymore if it rallies out of there. So if you followed the targeting technique and you followed the trade as is, you are, out at 64.50 long before this rally. And, you look at your general setup here. He gave you not only target, he gave you your entry price, 68.50, a target price, and a stop loss price, and making sure you know when the earnings date is. Just one winner. And if you go through the list, these have been just nails. He has been putting out great lists. Last week when I put out my midweek watch list, I think I hit 8 out of 9 or 8 out of 10 of those. Having those types of picks. I've spent a lot of money in the past, Tim, for pick lists, for like stock pick lists, swing lists, and had different scanning tools available. And, it's the ability to find something to trade at will. I think it's very, very valuable, and having a good list to go to, I think is very, very, very valuable. Now, the important thing is you don't take these trades without your own analysis. You don't take these trades without understanding the risk. This is a game for grown-ups, and we make trades. We throw them out there. We're not always right. the key, I think, to success is making sure you always manage the risk, because this is a tremendous resource. I've been loving the scouting report. I wait for it every week, and I'm excited to see what Gino puts out, because then I don't have to go spend as much time scanning myself. But I do scan anyway. I find my own picks and candidates, but I certainly do love the trades handed to me on a silver platter like that. That's always nice.
Oh, absolutely. It's tremendous value, and it's probably my favorite thing that we do here. Maybe the coaches show. I mean, I love getting, online with you guys and rapping about the markets and everything. And, participation is encouraged. When we put out the scouting report, go into the clubhouse and comment on which ones you like the best, which ones you took trades on, which ones you got stopped out on, or which ones you got profits on. We want that clubhouse to be an interactive environment, and that's why I love, Melanie, that you put the question in there. We do have another coach that just joined us. Is that Gino or Matt?
It's Gino, but I don't know if you can hear me.
Oh, Gino,
we can hear you.
Great.
Oh, good. I don't see my name in
talking...
the staff list. Where's it at?
We blocked you out, Gino, since you can't show.
It says Matt. It says I'm Matt.
We're both Matt. You and I are Matt Justice. It's kind of like
we're gonna get in trouble.
Yeah,
Let's get in trouble.
I've already stolen his credit cards too, and I've been buying electronics all week, so I'm good.
Did you guys know that today I learned karate?
In one day? That is awesome.
Yeah. I punched through a board today.
Really?
Yeah.
Oh, you've been around Jim Francis, haven't you?
Yep, I sure have.
That because you got a margin call, Tim?
No, I think he was hanging out with Jim Francis, who got the whole room to break boards.
Yeah, it was amazing. It was a great presentation. He got a room of complete novices to stand up and attempt to break a board. There were 70-year-old women, 25-year-old men, didn't matter. We all broke a board today, Gino. Probably 150 people. It was awesome.
I've done this exercise with Jim, and he does. He gets you kind of psyched up and gets you thinking about the things you can do. And I sat in an exercise with him not too long ago where he had us write down all of our things that we want to see happen. We wrote down all of our fears on the board, and then we wrote down all of our goals on the board, and then we basically, committed to accomplishing those things. And you set the board up, you have somebody hold it, and you punch through it. I'd never broken a board without a hammer or a saw in my life, and I was quite impressed that I was able to punch through the board on my first try.
Wow.
You know what he told me the key was, Gino?
I have a real weak board.
That's not it.
Pre-cutting the board with a utility knife?
It's one of those bendable boards?
No, it was half inch pine.
You have to focus beyond the target. If you're just trying to punch the board, your hand's going to bounce off. You have to have a stance, and you got to twist your hips, and it was a whole thing. It made me feel like the Karate Kid. I loved it.
Oh yeah.
It was awesome.
Sweet. I like it.
So anyway, I gotta bounce here in just a minute.
Well, here's my thought, Gino. While I've got Gino here, if Tim's got to bounce, I got to bounce here in a couple minutes. What I thought we could do is wrap
up. Got the watch list all loaded up.
I would like to run some scans real quick and just find some candidates. If Jim's got the watch list coming, let me see if I can find something to trade real quick.
Yeah.
I'm going to run.
Tomorrow I'm going to put out the new scouting report.
Okay.
And I'm still favoring the Bears team. Did you guys talk about how good the Bears team did? On the I don't know if you bring up the website, but did you bring up the website and show my follow-up trades?
Yeah. Absolutely. We didn't talk about your follow-up trades, but we did pop open your scouting report and looked at your candidates.
Okay, there's the scouting report, but keep going down to the comments. I post once or twice a week. Very next day on Monday, most of them were very profitable. Yeah, keep going down. Where's my comments? Right there. Right there's the first set of comments. See that? HCA triggered. Keep going up.
Keep going back up.
Yeah, there's the comments right there.
New trades.
So see, it says update profit taking already in 1 day of list. Bulls team triggered and stopped out. That's because of the dang volatility. The Bears team, it's your game, guys, but a bounce expected. Scale out. I went as far to tell people that take some profit off because all my reversal indicators, like the VIX being outside the Bollinger. So when you see a reversal indicator, take some profit, but not all of it. But I put what I do in there. I like on HCA, it triggered. I took 25% of the position off. And Only if I'm showing more than $100, because anything less than that, you're probably not really making much.
So I know your price is now $100. I can talk you into doing stuff for $100.
Oh, you got it. You got it.
Sweet. Put out a new watch list for us. I'll give you $100. I like it.
And then the credits. I was closing the bull put, only the short leg, because if you get out for a nickel, and some people don't know what that means, but basically you don't have to shut down the whole bull put. You only have to shut down the short leg, especially when it's a nickel.
And that eliminates your liability and risk and all
absolutely.
Of those.
That's a great thing to do when
I like
you get out
it.
a short leg only. The debit condors, RH, nice profit already, closing half. Anytime you get a condor or a debit spread, any form of debit spread, if you can make profit right away on day number one, you always take it, because directional trading times against you, especially in the options. So if you're out of the gate making money, always take some off the table, but leave something in there.
Yep.
Then check out the next one, the next update. It says, wow, home runs. We had a follow through, and pretty much all the bears are profitable. Some of these were 100% profitable. Some of them were 50. But here's the deal. I can't put the percent profitable on there because I'm not trading. Like, you'll see websites out there. What they do is they say, we're buying this call and we're selling it. We made 90%. Well, that's not what a real trader does. That's called a one contract wonder or one hit wonder.
Yeah.
Real traders, I'm doing 10, 20, 100, 200 contracts. I'm taking a chunk of them off right when I'm profitable to pay for the slippage. Then I'm taking another 20 or 30 off. Then I'm taking until I get down to like one or two contracts. So I don't know the total return after I add it all up.
Well,
so
you're doing things that I'd say, that's one of the biggest secrets that really helped me with my own trading was the scaling out and taking profits and adjust, kind of following through and locking some in and letting some run.
By the way, when you started scaling out, Noah, is that when you realized, oh my God, I'm a trader? Because before that, it was like 3 or 4 contracts, either take it or leave it. You know what I mean?
Well, it was definitely that transition, because one of the bigger challenges I had is with the emotions of trading, the greed, like, oh, I'm up $500. Well, if $500 is good, then clearly $800 is better. And, I'd want to make more, and I'd get the $500 back, and I'd even let it turn into a loser. And
well, what's funny is you get this thing. It takes about 1,000 trades to sink in that. Wow, I'm looking at $500. It's got to go to 1,000. It's on fire. And then you give it back. After you've been slapped 1,000 times, you start to go, you know what? I'm going to start taking that $500, or at least a piece of it. So really, the $100 rule for me is I go back to where I used to work a long time to make $100. And if I can make it on a trade, which only takes me 5 minutes to place, I better take some of it because that's valuable to me.
Well, let's look at something like that. My technical assessment on the market, Gino, you tell me if you agree. I'm looking at the S&P index. I think we're in for a short-term bounce, not a long-term bounce. Short-term, maybe a day or two up.
So I don't call it a short-term bounce. Some people
I think we're turning into a bear retracement based off of where we're at. I think it becomes a bear retracement. We're overextended to the downside.
Oh, I see what you're looking at. Ouch.
We're looking at the market. 1850 is a big number.
Mm-hmm.
And I think that if you were profitable this week as a bear, I'm going to ask you this question, Gino. If you had a good week trading bearishly and you want to have a good weekend, as Tim says, what do you want to do to your bear postures?
Tighten up the stops, and I tighten up stops whatever's left of them. Because if you look at the newsletter, I've been taking profit every day.
Yeah, I'd say people are going to be closing out. I think Friday your bears will be closing out, and if they're buying to cover, I think that drives the market up. And
but what I did do today is I added a lot of naked puts and bull puts to the downside.
That was my first reaction, is with the market being down as far as it is and the VIX being as high up as it is, I think this is a great opportunity for naked puts. So why don't we just take the next few moments, and I'm going to run some scans for stuff that's oversold. And
you picked my favorite right there.
So I'm going to go run overextended set. So I'm going to go with.
Let me jump in.
Yep.
I'm going to let you guys do that and bid you adieu and go.
Where are you going, Tim?
I'm in Las Vegas at the symposium, and my wife and kids are waiting to go to dinner. So.
What hotel?
We're at the Riviera.
Oh.
And so we're right by Circus. Are you coming over?
I might. I don't know. I didn't know you were going to be there.
Yeah.
Tim,
Yeah,
go
well,
find
it's
Andy.
Sunday.
Go find Andy Tanner and make him go do the ring toss game with you. Say Noah told me you have to take him to Circus and do the ring toss game with him.
Tim,
I will
Tim, are
go
you working
find
a
him. He's
booth?
hard to miss.
Are you
No,
working
I'm
a
just
booth?
hanging out. I'm hanging out. Gino, one of my students is going into the Hall of Fame for Rich Dad on
Oh,
Saturday.
nice.
And I just came down, brought the wife and kids. We're just hanging out, and I got to listen to a bunch of speeches today and stuff. It was pretty cool.
Hey, the Hall of Fame's great. They're going to bring you up on stage, Tim, with 1,500 people. I did it last year or the year before. And you get to stand up there with Robert, and they're going to hand you the microphone and ask you how it feels to have a Hall of Famer. So be ready.
And, okay, I'll get my
Who made
speech
the Hall of
ready.
Fame?
Sweet. All right.
Steve Wong.
Oh, nice.
He's a tackle trading team member, actually. He posts in our clubhouse every now and then. Most of these guys know Steve, but it's Steve.
Fantastic.
Yeah, I've met Steve
That's
many
exciting.
times.
Well, congratulations. Enjoy the weekend in Vegas. Just remember what happens in Vegas stays in Vegas.
Yeah.
No, not everything.
Not true.
But did you get a $1,000 suite, Tim, or did you get a little cheap room?
Are you kidding
Big
me?
suite. Tell me you got a big suite.
I don't spend money just to spend it, Gino. I got the 2 queen beds. My kids sleep on the one. Me and my wife sleep on the other. We got Wi-Fi. We're like living like kings right now.
Oh, good. We'll come out there. We'll upgrade to the suite. We're gonna get the penthouse. We'll write it off.
All right,
Sounds
see
like
you
a
guys.
plan. Okay.
See you there,
So,
buddy.
all right, I'm going to run a scan, Gino, for stocks that are overstretched down and that have. I'm running an advanced technical scan in Mock Trader. This is a Mock 4 scan, and what it looks for is stocks that have gone beyond their average move. I'm going to rank them by their range and go
so
find.
You can assume these are already outside the Bollinger?
All of these would be out. Well, if I put a Bollinger Band on the chart, yes. What they technically look for, I'm going to go add a pivot study on here, and I'm going to put the advanced pivots on there. What it does, Gino, is it tells me what the typical movement for the stock is. And so, for example, here, Google, over the average of 5 days, runs 53 points. Netflix, over 4 or 5 days, runs 33 points between support and resistance. Amazon averages 21 points. And so when we come and look at these candidates and we look at how far down they've run, Google ran from 580 down to 520, 516. Well, that is a lot more than its 53 typical points. It has gone 60 plus points. So it's saying what the scan does is it says basically, look, Google's average swing is about 50 points between support and resistance. And so it's saying, well, this is a typical swing. Once it gets past that range, it's probably going to revert to the mean. So it's saying, anything beyond that average. So it gives me those numbers, and every one of these is going to be overextended. Now, Netflix, I don't want to run out and buy. That just came off of earnings.
But by the way, Google had earnings today, and they're down $9 in after hours, 2%.
So I want to find something that is overextended into a buy zone, just like Goldman Sachs. Now, I don't know when their earnings is. I'm assuming they just had it, but it's down, down, boom. It's in a zone where people would buy based off of maybe support or resistance or trend. So here's a buy resistance support zone. It's extended down. It's in a technical buy zone. So I'm finding a couple things out. It's overextended to the downside. It's in a buy zone. It's got inverted hammers. If I can go put on naked puts or bull put credit spreads down below it, then that's kind of how I'd roll with that. So I would take Goldman Sachs and I'd maybe go take a look at what the option premiums look like on that. Let me grab I got the virtual platform. Let me pop it open here. And if I were to pop that in there, can I price out a naked put or a credit spread that I like? So let me go with this here. Boom. Look at their chain. If you were going to sell options right now, let's see, when do they have an earnings announcement? I don't want to get stuck. It was already done, so I don't have to worry about earnings.
I believe it was because I got a message on my smartphone on it.
So already done. And the question then is I'd probably read that earnings report in detail, make sure I understood it. I would say if I could find a trade at this point in time and not have to worry about earnings, that might be something I'd be willing to do. Maybe look at weekly options.
They posted better than stronger results.
So better than expected results, and it's in a buy zone, and it has a gap associated with it. So selling options down below it might not be a bad deal if we can get far. If I could sell options down at 165 or so,
Right.
there's a ton of premium in these still, and they're not the best bid-ask spreads, but I could play around, and I want to do it during market hours. But those are the
I
types
like
of
that
opportunities.
150. I like that 150 that you're just looking at.
Yeah, these are the kinds of opportunities I look for, is the ability to go find stuff that got overextended to the downside.
Oh, there's Charter. It's on our list.
Yep.
HTR.
Well, here, look at this. We got Costco down, heading into fourth quarter. I don't know if you've ever set foot in a Costco during the holidays, but I don't.
Oh, yeah.
I'm not going to bet against them in the fourth quarter. You put them in a buy zone like that. I don't need to own Costco, but if I could sell low out of the money puts on that, when do they have earnings? That's one of the other things I want to make sure I'm not running into an earnings event. So earnings is not okay. Perfect. They don't have earnings until December, so I could very easily put on out of the money options trades even through November. I could use the November contracts.
And you know what? I'm actually picking, believe it or not, Noah, I'm going as far down as I want on the bull puts. For instance, on the S&P, I'm down at the 1100 strike. It's at 1800. I'm at 1100.
Yeah,
why? Because there
can...
shouldn't be an option price there. There should not be an option price that far out of the money. But all this panic created volatility where there's like 80 cents, $1 down in the credit spreads. So as soon as the volatility drops,
yeah, I like that.
It doesn't matter what month you're in. It could be a year out. The price is going to deflate.
Yep, I like it.
You don't have to do the near term.
That's the good plan. So check this one out. How do you feel about 115 by 110 for a month? 115 being clear down there.
And if you think that's too close, go out the next month or next couple of weeks and go farther down.
You can pull 46 cents.
Bounces, everything's going to lose.
Yeah. If I could pull 46 cents on a $4,500 margin requirement, that's a classic type credit spread. So
that's nice.
I like it.
But the big mistake that everybody's making right now is they're doing the weekly credit spreads, and they're dangerous when this market could jump 2% in a day.
Yeah, I like if the market's this volatile, those could be that puts you close to the action. I don't mind going a little further out. One of the reasons I like to go out and use the typical monthlies is one, I know how to hedge and adjust those. If the market does move and change, I have plenty of time to change the trade.
You got time to adjust them, and you're safer.
Because
now it's a volatility play.
It is, and so I think with the VIX, we did talk about one of the things we did talk about, Gino, was we popped open the VIX and we talked about your comment at the Coaches Show where it closed down, and I'll throw the Bollinger Band on there.
Yeah, it hasn't gone in the Bollinger Band yet.
It is actually, I believe, today. If I looked at it, it closed.
Finally closed today?
It's back inside of it, I believe. Bam, it's inside the band.
Oh, there it is. Just barely right there. There you go.
I've always done on that is I actually put a second Bollinger Band on it out at 3 deviations in price.
Oh, yeah.
And I set it out. So what I'm looking for is that signal of knowing when it's way out. So I put that on there just as if it pokes out and hitting that third rail, that third, bam, that's where I expect the revision. So I think the VIX coupled with the S&P, I haven't looked at what's that?
One more little Bollinger trick. One little more. When you see the bottom Bollinger, the opposite side of the Bollinger, starting to go flat or bending in, that means it's losing momentum and it's going to come together. So that's what it's doing now. See how it's kind of angling up?
Yep, right in here.
Yep, that means it's over.
Well, I have officially learned something new from you yet again. I've never really paid much attention to that. So
everybody forgets to look at the other side of the fence.
Well, let's take one last thing. I do have to wrap up myself.
What about
I was going to just bring that up, Gino. Let's crack open. Let's go do it in our trade center. Let's go to the trade center and pop open the trade.
You know how much money I've made on the Trin? Just the Trin alone. I wish the Trin had options you could sell against it.
There you go.
Like they changed the VIX.
What do you think about that Trin hitting 2 today?
Oh, there it went. Okay, so right at the open this morning, and I was there. I was actually up at 4:30 in the morning watching this because we were selling off hard on the futures overnight. We were down 2%. All the foreign markets totally just dropped. We had some problems in Europe, and we were actually, doing good at the midnight. So I went to bed at midnight. We're doing good, and the reason I was up so early, Noah, is my phone. I have it set with alerts, and if the S&P futures breaks certain areas, we're doomed. It went off. 2 minutes later, it went off again and broke 2 support levels. And it woke me up. But hey, that's means I got to do something. So that means there's opportunity. I go, oh my God, we're doomed. But when the market opened, I watched the trend. It jumped over 2, and I said, oh, we're going to rally off this. And we rallied all day.
Yep. So if we put that back, I'm bringing it intraday here on the E-mini futures, and they're actually still trading up since the close. So I always look at these going into the open. So here's what you're talking about, what we're looking at for the trading day. You see it after hours, rallied out. It's put in a double bottom, Gino. And I think if we trade above 1865-ish, that would be my signal that it's a reversal of that short-term trend. So I am actually expecting a short-term rally. It'll only last a couple of days. It'll become a bearish retracement, and then we're going to have great bearish picks, I think. So one of the reasons
can you go back to Trade Center and look at the rest of the world? How are they trading? Because I think they're gonna be rallying after seeing us rally.
Okay, where am I going to go look?
Just hit Trade Center. Just hit Trade Center. It goes right.
Trade Center here.
Yeah, it should take you right back to it. Because China's open, and there we go. Nikkei closes in 4 hours. They're down a little bit. The Shanghai is flat, and the Hang Seng is up. Okay, so you see, that's what I look at throwing out there. I was thinking that Asia would actually be up after watching us rally.
Mm-hmm. Well, it'll be interesting. I think if we watch, the European markets going into the open every day, I'm checking which way the European market went, but I'm also most interested in what the U.S. markets did overnight in reaction to that, because those traders, people around the world trade the U.S. futures market, and it's, that I come in and I want to see what the U.S. market's done. So I'm every night and morning I want to see that. So
did you see that Brazil market, what it did last night? Look at that down in the bottom.
I haven't looked at it, but bam, 3.27%. Boom. Yeah.
That's a bad day. That's a big margin call day there.
For Brazilian, there you go. So
if you're bullish in that market, you are just taking a beating. Look how big that red dot is. Look at that big red dot. I haven't seen a red dot like that in a long time.
So the size of the dot tells you it's correlated to the percentage of the move, how big it is, okay?
Yeah, up or down.
This is a fun little tool to look at. So you can check on your futures and go click on futures here. If you're not watching them, come see how they're playing around here and take a look at them. You'll get your futures. This is what we were just looking at. And we got a 5-minute time frame. You can change your time frame if you want. But I like to see.
This is a great little trade center. It really is. It's got a lot of neat stuff.
Yep. So good stuff in there. One location, and then it's right next to our clubhouse, so we can post I'd like to see people starting to share their trades and trading ideas, and mostly the success stories were what we want to see people sharing to help motivate each other. But even if you post a bad trade, that's good too, because that's something we all learn from. So we do need to wrap it up, Gino.
One more quick little tip. Are you on Thinkorswim right now?
I am on Thinkorswim. Yeah, I've got a virtual platform open.
Can you bring up a chart of SPX real quick? One more thing I always watch, and I don't take it 100%, but it's called the October effect.
Well, it just crashed on me. Yeah, so let's not do that.
Don't you? I've been getting a lot of those. Since the last update.
Their new upgrade's killing me. But, so we're looking at the SPX.
Yeah, SPX, and then under style. And daily, put daily.
Just a daily chart?
And then, daily, and where it says chart mode. See chart mode down there where it says standard?
Yeah.
See down there? Go down and look farther on your left. Okay. Chart mode. No, not the other column.
I've got to get my daily. We're going to a daily chart? Okay.
Yeah, daily.
Sorry, it's lagging on me a moment here, so let me get to my daily time frame.
Yeah, daily.
Okay, and then style, chart mode.
Yeah, chart mode's down there right below data box. One more up. And then seasonality, there it is. This tells you what it does on average during this time of the season. And there it is. So look at that. October, it usually bottoms in the beginning of October. See that?
Mm-hmm.
The red line in the bottom. And right now, it bottoms usually like the beginning of October, And especially, so I've been trading for almost 17 years. October's always been a sell-off or marked a bad time in the market, and then it turns into what we call getting ready for the seasonal Christmas rally.
Mm-hmm.
And I remember this because I always remember going, gosh darn, I go bearish in October. There's always bad news. I get stopped out. And then somehow the market miraculously recovers and takes off. Now, the funny thing is we've been bullish for the last, 4 years here. So this is actually looking better than it does. But it usually, before that, the seasonality chart would dip down more. But you can see where it dips there, and then in June. But look how it rallies into Christmas most often. So will it recover? I don't know. I think we're due for a kiss of death here.
Well, I think near
don't be
term,
surprised.
I think this week we were due for a rally. Then I think we see a kiss goodbye. The question will become, is it, and I'm going to do a little video on it this week, so keep your eyes on the video blog, of what happens after that potential kiss of death. The outcomes are very interesting, and there's a potential trading opportunity here that could be big. So keep an eye on it.
Oh, really?
Yep. So we do need to wrap up, and it's been a pleasure having everybody here with the expiration party. So glad everybody could make it out. We plan on doing these every month. Plus, we do our regular coaches show. And watch for more to come on tackletrading.com. Great group. Excited to have everybody here. And any final words of wisdom, Gino, before we wrap it up?
Yeah. If you're not used to a bear market, this could get even more volatile. We did a 10% correction already. And what amazes me is people are going to start noticing that in their 401ks when they get a mail to them. They're going to go, wow, I just talked to somebody out in the soccer field today. They go, hey, I have a $140,000 401k. It's already down $14,000, I said, in the last month. And they go, really? That quick? I go, yeah. So
yep, it hits. And once they
learning
start,
to manage.
that's important, absolutely critical. So I think
I said I put my sell signal out September 9th. I said, move your money on September 9th. And you'd have already saved $14,000 in that portfolio. And he goes, wow, maybe I should, start watching your site a little more. I go, yeah, that little $97 fee would have saved you 14 grand. But
absolutely.
Now, that's what it's about.
Well, this kiss goodbye rally gives people an opportunity to move their money. I've been getting that question a lot lately. When should I move my money? I see this market easily rallying back up to 19, and watch for that. That'll give you a little higher exit. And then what happens next? I don't know if we're going to see a big sell off or if the market's going to, rally and recover and head into the end of the year. But if you're watching, your market for opportunities to exit, I think that this is a good signal for us, breaking that to the downside. It could get people a little bit skittish. And I know the underlying economics, we've been talking about those for a long time. How stable is the economy? We haven't had a correction in 5 years. The average length of a bull market is, we've average length of the bull market's 5 years, and we're here 6 years into a bull market. We've been rallying 5 years since 2009 when it bottomed out, and we haven't seen a real big correction. So,
and 10% isn't that bad. That's normal. I'm actually thinking that we have a possible 20% correction, and you're the king of fibs. If you want to.
Oh, absolutely. That'll bring it down quite a bit. So I think that the potential downside, I actually wouldn't be surprised to see the market come all the way down to 1,500. Retest those old highs.
Wow, that'd be a 25%.
Well, it's a good size. That's the biggest support zone down there. So I would not be surprised to see this market down, 1,700, 1,600. I don't want people to get scared or panicked. I don't like to be that.
1,600 would be exactly 20%.
Yep, and that's the type of correction that'll get people waking up again and thinking about what their money's doing. I think the opportunity right now is in the next couple of weeks to watch for this market to rally out. And if you've got money sitting in 401ks or in mutual funds.
Can you throw Fibonacci on there real quick?
Yeah,
you have
bet.
that. Because you have that. You're the king of fibs. You're the king of fibs. I remember you teaching me how to use Fibonacci and Elliott Wave. And it's just so awesome when you get it down, how it works.
When you get a general understanding of how that moves.
Right.
You'll notice that 38% correction on the market. Big resistance coincides perfectly with your 38% retracement. We can measure off of multiple pivot points. And so if we look at these zones, they'll actually start to notice they coincide with each other a lot of times.
Yeah, look at that.
So it is, depending on how I might have to pick it off that double bottom here. We can look at the most recent set of market rallies. You draw enough lines on a chart, you hit something. But what I typically look for is if I can get them to line up. That's called a Fibonacci confluence zone. So that gives me confluence zones right here. Big support at 1700. Next big support 1500. Near term, you can look at these in every other support resistance zone you keep an eye on. Like you'll notice the key support resistance zone here at 1700 is old resistance pivots on the actual chart itself. The reason those coincide is because of the percentages and the general, what we call is, I guess you get a lot of symmetry in the markets, and a lot of, moves become self-similar because they reference themselves. So
yeah, I'm seeing a lot of, I'm seeing my target right now, 1727 to 1708, that area right there.
Ballpark.
And that's where they're crossing over. Yeah,
Yep.
So that on the next kiss of death, that's very possible. And believe it or not, that can happen in a couple of
Well,
weeks.
here's what I'm going to be talking about in the video, and this will be our segue on the way out. With Elliott wave cycles, the markets move. Let me do this here. After the correction here, you get the general slowdown at the top. You get your M for murder, and that first breakdown and the rally up to that kiss goodbye. If it's a minor correction in the market, the wave down, the correction's either an A, B, C. So it goes down here, A, it'll rally up to the kiss goodbye, go B, and then it'll do another small drop, which they call C, and it'll find its support, and then it'll rally out. But if it turns into a bear market, this actually ends up changing, and this wave count is 1. This one ends up being 2. And out here at the top, number 2. And instead of it being a C, it turns into an extended wave down, wave 3. And if you catch that third wave, that's the big drop. And so just to put that into perspective, if you go back and look at the S&P, this is the general idea right here is this is breakdown 1, this is up 2. And if that kiss goodbye goes big, it's not just a little ABC. Like this is, down here's a good example of ABC where it dropped, rallied,
Right.
dropped. That's ABC, and then it goes back up. You still get a drop, but if you get a big drop, that third wave, that is the big one right here. So that's actually down 3. This is up 4. That's down 5. So it could turn into the big one, and it's an opportunity that I don't know that I want to predict the top, but if you do see that bearish retracement set up in the next week or so, next couple of weeks, and we're on a weekly time frame. On the daily time frame, out here, I see it as a bearish retracement with a minimum opportunity for a drop, but then it could become something more. So I think the big key is whether or not other people want to pull their money out of the markets, and if people get scared and move their money, who knows how far it could drop? 20%.
You think I'm okay, even though it's dropping? No, if it did do that big wave 3 down, do you think I'm safe at 1100?
Yeah, you give up a lot of cash on that. So
I'm down 700 points farther than where it is now.
Yep, not good. All right, let's wrap it up. Let's call it a night. It's been a pleasure. We will see everybody in our next Coaches Show, and we'll see you on the web. Thanks, everybody. We'll see you. Good night.
Good night.
Get in the game. www.tackletrading.com